Good morning, togglers. Today we're going to take a look at Booz Allen Hamilton. It's a company that probably not many of you look at all that frequently, but it might be worthwhile looking today because there is a chance that there could be a bounce after the oversold condition that this stock has found itself in. As you can see, it hit 90, but then crashed all the way down into the 80s. And what Toggle is basically highlighting, this could be an interesting data point. This could be an interesting entry point for this particular stock. There have been some positive insights that have correctly anticipated the rise from a kind of the low 80s into the 90 range. So let's see what Toggle is currently talking about and what it's looking at in order to highlight this as a potential at least halfway recovery, not necessarily all the way back to the highs, but certainly could get part of the way there. And potentially in some of the cases, it could have also reached all the way back into the highs and exceeding them. Importantly, there have been 11 similar occasions where the entry point indicators were similarly oversold. This is where Toggle basically looks at the degree to which the stock has moved, compares it to previous moves, and then suggests that the move might have gone far enough and that a bounce is due. This is not laying out a bullish thesis for the business of the company or anything of the sort. What a rise of 7% over the next 3 months would mean for the stock, well, I would see it go back to 86.28. Importantly, what you would note here is that it doesn't necessarily have to take 3 months at all. This could be a much faster bounce back. In fact, it looks like in some cases it took as few as a couple of weeks to get there. Importantly, also, the price should stay within this confidence interval, because if it does go further below this, and particularly below the 77, 73 red line, it suggests that something else is extending the sell-off, and presumably the oversold condition that previously had been a good moment to buy simply isn't this time, because there is a more powerful driver that is powering the stock lower. Now, why did my move? Let's take a look at this. You can see here just how extended the stock has been on this surprise move. So again, the way we look at a surprise move, we simply look at the return over the past month and then adjust by the volatility that existed at the time when the move began to kind of put it in context. Meaning, if you move 2%, but you're a stock that generally moves 4 to 5% in a month, well, then that's not a big move. But if typically the move would have been 2 to 3% and you move 6%, well, that's a notable move. And this is the kind of move that we're seeing here. So something that is out of the ordinary. And when you've had these out of the ordinary moves previously, although you can't see it here, this was a moment where the stock typically bounced. And we can look at the past performance, and you can see actually all of these green dots that just suggest that if you had been buying it across all these other 11 occasions, that generally you would have made money because the stock would have risen in all of these cases. Now, this is as much as we want to talk about Booz Allen Hamilton today. In the daily brief, we also discuss the lessons that the policymakers could be drawing from the current recessions, which actually turns out is the shortest on record, so the shortest ever for the US economy. And if you are subscribers to the daily brief, it should be already in your mailboxes. If you are not, you can do so very easily at toggle.global. Otherwise, if you'd like to see more of these videos like this one, subscribe to our YouTube channel. And more broadly, we try to do them every market trading day. Really, the goal is to break down the barrier between you, the individual investor, and the ocean of fundamental data out there. Thank you for your attention, and we'll see you again tomorrow.